All right, so it will be after Bajaj, Rajiv Bajaj. This is Paresh Sukthankar of HDFC Bank who will talk about his numbers. They have a lot of positive things to speak about. The profit itself is higher than what the street expected, coming up about 35%. The profit, okay, up 31% at 1429 crore. That's a great place to be when your base already is over 1,000 crores. As well, a good performance on the margin front, 4.1% maintained in the teeth of competition, especially with several smaller private banks increasing this rate on their savings accounts. Okay, that's Paresh Sukthankar.
Some of the highlights of the quarter's results, and I'll obviously be happy to take questions thereafter. As you're aware, the net profit growth for this quarter on a year-on-year basis was 31.4%. If I go behind those numbers, the total income growth, which is interest earned and the other income, total income growth was 35.6%, taking the total income to 8,622 crores. Net revenue growth, which is net interest income plus other income, was about 16.2% to 4,536 crores. The major component of net revenues is, as always, net interest income. Net interest income grew by 12.2% and to 3,116 crores. The other income portion, which is other than the net interest income, that grew by 25.9%, and that's therefore touched 1,420 crores. So that's the rough composition of the revenue side. The cost to income ratio was fairly stable. The core cost to income ratio was at 46.7% as against 46.5%, so it's roughly stable. I'll come to the asset quality figures later, but those figures also remain stable, and as a result the total provisions were lower. The total provisions were at 329 crores as against 465 crores for the quarter ended December 2010. Of that 329 crores, the loan loss provisions, which include not just the specific provisions for NPLs but also include general and floating provisions, the total loan loss provisions were at 289 crores, and about 45% of those were general and floating provisions. So that's the total of the provision line, and as I said earlier, all of this brings us to the bottom line, which was up 31.4%. On the balance sheet side, if you look at the overall balance sheet growth, adjusted for some changes on the AS30 side, the growth was about 24%. That's in the balance sheet size on a core basis. The size of the balance sheet, of course, is now 3,35,000 crores. Total deposit growth was about 21%, and therefore our total deposits now are at 2,32,000 crores. So this 21% compares fairly well with the system deposit growth, which has been around 17% as of December. Our core CASA ratio remained at 47.7%, so it has been in that 46 to 48% range for some time now, and that's been maintained. Although, as you can imagine, with the higher fixed deposit rates in the last couple of quarters, we have seen some migration of CASA deposits to fixed deposits, but despite that, the CASA ratio remains healthy at 47.7, and savings accounts in absolute terms, in terms of savings accounts deposits, grew by a little over 15% and are at 70,000 crores. So both those figures have held up fairly well. Our gross advances were up 21.9%. Again, that's the close to 22% growth in advances compares fairly well vis-a-vis the system loan growth, the system advances growth, which as of December was around 16%. So for the 9 months ended December, our profits are up about 32% at 3,714 crores. A couple of other financial parameters. The capital adequacy ratio is at 16.3%, which is in fact constant from what it was in December of last year. The Tier 1 ratio is again at 11.2. The Tier 1 ratio does not include the profits for the quarter because this is subject to a limited review and not audit. the half-year results were audited, so the profits up to half-year were already in the September numbers. But so Tier 1 at 11.2. If you look at the expansion in the branch network, that's been fairly substantial. In fact, we moved from what was 1,780 branches in December of 2010 to 2,201 branches as of December 2011. So that's a total increase of 421 branches. And what makes it even more special for us is that of those 421 new branches, 341 of those were in new cities. So we've essentially added 341 new cities to our footprint in terms of the distribution network. Of course, our ATMs have also gone up substantially from 5,121 to 7,110. So there has been a huge investment in both the ATM and the branch network, and as I mentioned earlier, despite that, the cost-to-income ratio on a core basis has remained more or less stable, about 20 basis points up on a year-on-year basis. Asset quality, I'm happy to say, again remains stable. Well, a marginal improvement if you go to the second decimal, but let me stick with the fact that the gross NPA number is at 1.0%. Our net NPAs remain at 0.2%. Our coverage ratio is at 80%, and this is the coverage ratio based only on specific provisions, so it does not include any technical or other write-offs. Just based on the specific provisions, the coverage is at 80%. The total restructured assets again remain unchanged at 0.4% of our total loan book. So those are some of the key parameters. Happy to take any questions that you might have.
Tell us your margins कैसे देख रहे हैं going forward from your, will you be able to maintain पूरे साल के लिए current margins for the whole year?
Well, if you look at it in the second quarter, हमारे margins जो 4.2 थे earlier, 4.2 से 4.1 तक आ गए थे, और इस quarter में margins stable रहे हैं 4.1. So already out of the 3 quarters so far, 2 quarters में margin 4.1 रहा है. हमने traditionally कहा है कि हमारे जो net interest margins हैं वो काफ़ी सालों से एक thin range में है, between 3.9 and 4.3. Within that range वो 10, 15, 20 basis point शायद fluctuate करते हैं, मगर उसी range में रहते हैं. And at this point of time we are fairly comfortable that the traditional range that we've been in of 3.9 to 4.3 continues to hold good.
Sir, let me ask you on the loan growth side, and first of all let me congratulate you on an adjusted basis. 24% is a significant outperformance, especially if you compare to industry average. Can you give us a breakup of the retail as well as the corporate as of now, and while other banks and most of the system is seeing quite a fair bit of moderation, where has the incremental growth come from for HDFC?
So if you look at the overall mix of the loan book, it's now 51% retail and 49% wholesale. So it remains at roughly half and half, which again I think it has been for some time. In this quarter, so if you look at December over December, the growth in retail loans is a little higher. It's about 29% as against about 15% on the wholesale side. Having said that, this is a result of some deliberate moderation on the wholesale side, because as you're aware, a large part of our wholesale lending tends to be short and medium term, where we have the flexibility of moderating our rate of growth to achieve what we want to achieve in terms of the mix of loans and the appropriate yields. So if you look at the growth, it's come on the back of strong volume growth across a range of products on retail, and that includes several products including business banking, commercial vehicles, personal loans, credit cards, home loans, auto. I mean, it's really the slows of the products have grown still in the teens and higher. So there's very little to choose. Obviously there are differences in the rates of growth, but across virtually the entire range of retail products we have seen healthy loan growth, where we have essentially consolidated our position as a market leader in most of these products. We've extended our geographical spread. So as we've added branches, we've gone to newer locations and newer markets. So combination of what we offer in terms of service and pricing and product with the added distribution has helped us grow the retail book certainly at a pace which has been ahead of what perhaps the system retail loan growth has been. On the wholesale side, what we did was that while we see strong demand and we've continued to therefore grow our book at a reasonable rate of almost 15%, we've actually cut back a little on some of the corporate lending, simply because at the margin, if you look at the marginal fixed deposit rates, and if you look at the marginal yield on a corporate short-term corporate asset, then it's not necessarily worth our while from a margin perspective to do that much. So we've been willing to give up a little bit at the margin of growth, but in the process we've protected our net interest margin. So, the sort of basic bottom line to your question is that we've achieved the growth across wholesale and retail, but certainly in this particular quarter the growth has been a little more in the retail segment.
So for the system, what is your sense for the system going forward? Will we see a 16-18%? As of now, nobody is expecting that. We're all looking at 13-14, and thereby then your guidance for HDFC Bank.
Well, we still believe that if the ultimate real GDP growth for this year, and I know that there are different expectations on that, but if you still do somewhere between 6.8 and 7%, let's say 7% as the real GDP growth for the year, then the roughly 16% odd loan growth we believe is still a realistic number.